Good morning. This is Larry McMillan with a market update on Monday, August 24th, before the market opens. So last week saw S&P finally get up to new all-time highs, barely, and now this morning it looks like it's going to gap out strongly to much higher all-time highs. So that's a positive overall. I mean, the S&P chart looks great. It's trending higher. It's above its 20-day every moving average, really. And there's support levels below here at various levels, 33.25 being one, and then 32.80, 3200, maybe even last week's lows you could consider support. But right now the chart looks great. There's some other indicators that don't look so good, but we'll get to those in a minute. The put-call ratios remain at very, very low levels. There was heavy call buying again last week, especially on Friday, and the weighted ratio has now dropped to lower than it was in January, which is extremely overbought, and of course is a big danger signal. But again, overbought does not mean sell, so we don't have an actual sell signal there until the ratio turns and begins to move higher. Breadth is an area that's been quite negative and is probably going to lead to problems eventually here. Uh, we had negative breadth again on Friday and also on Thursday in New York Stock Exchange terms as well as stocks only terms. And so both breadth oscillators are on sell signals. Perhaps even more problematic is the fact that the S&P is now making new all-time highs and cumulative breadth is not. It's beginning to fall away. That started to happen in late January, lasted for about a month, and then we know what happened in February, late February. So again, this is a severe warning sign, really. Cumulative breadth as a negative divergence is one of our strongest indicators of a market top. Now, it can last for quite a while. So what it really means is you can't ignore sell signals. So don't be drawn into being complacent while this condition exists. If sell signals do occur, you need to take them. And then, of course, as more occur, you add to your positions. The volatility complex, though, is still remaining positive. VIX is trending lower, which is really all you can ask if you're trying to look for an intermediate term signal from the VIX chart. And in the short term, we'll be watching for VIX to spike up, but it hasn't done that yet either. So, overall, the trend is positive of SPX, and since that chart is positive, so are we. But we are being cautious. We're looking at a few things here. And if we do start to get confirmed sell signals, we will be acting on them. Eventually, S&P chart would have to break support, though, in order for us to turn truly bearish. So thanks for listening. I invite you to visit our website, optionstrategist.com. Take a look at our newsletters and other things we have there. Good luck and have a great week trading.